Let us look at the essential features of money market funds. Money market funds. When we look at the characteristics that these funds, tend to possess. Money market funds are low-risk, short-term investment vehicles that aim to provide liquidity, stability, and income to investors. So here are the key features or characteristics of money market funds. Number one is low risk. Low risk. And money market funds invest in highly liquid, short-term debt securities like treasury bills, like repurchase agreements and commercial papers. This makes them one of the safest, investment options out there because of the level of diversification in different, safe investment vehicles. The entire fund, tend to possess a lower level of risk. Number two is liquidity. That liquidity is, an important feature of money market funds. Money market funds provide high liquidity, allowing investors to quickly convert their investment into cash, without significant loss in value. This makes them an excellent choice, for those who want to park their cash somewhere, on a temporary basis. So it's a short-term instrument and it's highly liquid. You have some money you wouldn't want to use in the short run, in the short time. You just park it there to yield returns for you, pending when you utilize it, somewhere else. Number three is stability. Stability here is a key characteristics of money market funds. The value of a money market fund typically remains stable, at $1 per share. This is due to the conservative nature of the investments it holds. It is stable and they invest in conservative, not risky, stable investments. And so the fund itself overall portrays the stability of the nature of the investments it is holding. Number five is low returns. Low returns. Since they kind of they invest in safe, stable, short term, they invest in that they invest in stable, they invest in short term, instruments. That particular stability is really is guaranteed. Number four is short-term investment. Money market fund primarily invest in short-term instruments, typically with maturities of less than a year, less than 1 year, which helps to kind of minimize interest rate risk. Because of the short-term nature of the investment they pick into the portfolio, so they are not really exposed to risk of change or fluctuation in interest rates. Number five is low returns. So they are actually safe. As I told us earlier, they invest in short-term assets, but they typically produce lower returns, essentially because the investments they get involved in are low risk, stable, safe kind of investments, but they usually take a short time duration. And so the returns generally are kind of low compared to you investing, in the in the stock market using a traditional kind of investment strategy. Number six is interest income. Interest income. So investment in money market funds, they earn income through interest generated by the short-term securities they hold. The income is usually paid out either monthly or quarterly. Mind you, they don't really invest for that for a considerable period of time, generally a year, or less. So the security, the components, the component securities in these funds, guarantees that interest comes in regularly. Generally, they invest in bonds, in commercial papers, and other short-term instruments like that, and then they tend to get their returns, on a regular, basis. Number 7 is diversification. Money market funds invest in a wide variety of short-term instruments, providing a degree of diversification that reduces or mitigates risks to investors. So the instruments they invest in, they are short-term in nature, and at the same time they also guarantee adequate diversification that lowers the risk of the entire portfolio. Please like this video and subscribe to this channel if you've not done that. Number 8 is no FDIC insurance. Unlike saving accounts, money market funds are not insured by Federal Deposit Insurance Corporation. However, the underlying assets are usually considered very low risk, although they're not actually secured by this government agency. But all the same, the underlying assets, the kind of assets they have in the portfolio are considered low risk. So that would mitigate the fact that even without the entire the fund being secured or being insured, there's that guarantee that the investment is relatively safe. Number 9 is expense ratio. Ratio. And you discover that many money market funds charge fees for managing the investment, but these fees tend to be lower than what other mutual funds charge, due to the simplicity and low cost nature of their investments. You discover that the expense ratio or the fee they charge is somewhat lower compared to other funds in this category. Number 10 is used for cash management. It is used for cash management. So many investors use money market fund for cash management, as they provide a specific place and even a safer place, for that matter, for them to pack in their cash, for a short-term yield, in returns, without the volatility of the stock markets. They escape the risk and the stock markets, and they park their money in this vehicle. These features make money market funds an attractive option for conservative investors, or for those who are looking to preserve capital in the short run or in the short term.